Folks, we've gotten a lot of economic data over the past couple of days, really just today and yesterday, that I want to break down on this video. We're also going to break down how the stock market's doing, charts, what I'm looking to do, all that good stuff. But of course, before we do that, guys, don't forget to get your free money from Moomoo, the sponsor of today's video. Up to 16 stocks, each up to $2,000. Just use that link down below, or of course, go to stocksurfest.com/Moomoo, open up your account, fund it with at least $100. You get 5 stocks, and fund your account with at least $1,000. You get 10 more stocks, totaling 15 stocks, each up to $2,000. And listen to this, guys, fund your account with at least $5,000 on top of those 15 stocks. You also get another free share of either Tesla stock or Google, guaranteed. And guys, the clock's ticking. Use that link down below. And of course, that is an affiliate link. I appreciate you guys as always. And with that being said, cheers. Let's dive into it. So check it out. Right now, the markets are doing pretty well. We have the Russell up 1.5%, the Nasdaq's up 0.4%. Well, I guess the Dow's not doing that great. It's at break even, but we have the S&P up 0.25% as the VIX is down over 6%. And at one point, I think yesterday, or was it the day before? Maybe the day before, the VIX was up 18% at one point. It was pretty crazy. So let's break down this economic data that came out. Let me actually come over here to Forex Factory, guys. Bear with me. Give me a second. Smash that like button. I appreciate you all for being here. As always, make sure to subscribe as well if you have not done so already. We're almost at 30,000 subscribers. So let me make my face a little bit smaller because I'm working with one screen here, guys. I've not been, I've been used to working with 3 screens or 3 screens for a while now. We're obviously in a different location. So bear with me. Bear freaking with me. Give me a second here. So on what day was this? Wednesday, or let me see, Thursday, yesterday, we got the ADP non-farm employment change, which, let me pop this up and show you guys. This measures the estimated change in the number of employed people during the previous month, excluding the farming industry and the government. And of course, this data provides an early look at employment growth, usually 2 days ahead of the government's released employment data that it's designed to mimic. And you guys can see that came in at 497,000, it looks like, way above the 226,000 forecast. Holy crap. And previously it was at 267,000. So that's the ADP non-farm employment change. Let me come down a little bit more and show you guys the unemployment claims, which you all know that comes out every Thursday at 8:30 a.m. on the East Coast. This measures the number of individuals who have filed for unemployment insurance for the first time during the past week, which you guys probably know that's been ranging between 230, 240, 250,000 over the past couple of weeks at least. I'm not sure exactly the trend of that over the long term off the top of my head, or at least over the past 6-12 months. But recently, from my memory, over the past couple of weeks, the unemployment claims have been 200,000, 250, between that range. And let me see what else, guys. Let's come down a little bit more. Yesterday, we also got the ISM Services PMI, the JOLTS job openings, which we can see here. That measures the number of job openings during the reported month, excluding the farming industry. That came in at 9.82 million, a little bit less than the forecast of 9.93, and way less than the previous number, which was 10.3 million. So we're talking about, a good chunk less than the previous number there for JOLTS job openings. And coming down here to what I want to talk about really for today's video, guys, is the average hourly earnings, non-farm employment change, and the unemployment rate right now for the U.S. And it looks like we got the Canada employment change and the unemployment rate for Canada, which right now it looks like it's at 5.4%. Previously, it was 5.2%, and it was actually forecasted to be at 5.3%. So unemployment in Canada, guys, the unemployment rate is creeping up there a little bit more than what they're forecasting. Not the best sign over there for Canada. But here in the U.S., guys, unemployment rate came in at 3.6%. My goodness, guys. And the forecast was 3.6%. And last, it was actually previously 3.7%. So the economy here is doing pretty well, guys. I mean, look, sure, non-farm employment change, that cooled off, which we'll talk about in a second, but the unemployment rate is still very low. If you want a job in the U.S. at this point, it's fairly, I'm not going to say it's extremely easy for anybody out there to go get a job, but there's a lot of jobs. Let's be honest. Jobs are plentiful right now, and that goes to show here in the unemployment rate. It's at 3.6%. And let's be honest, guys, what does the Fed want to do? The Fed wants to increase the unemployment rate because that's going to help, of course, with inflation coming down, which they've said time and time again, inflation is very sticky. It's still sticky, even though it's come down a good chunk from the highs. The Fed still thinks they need to raise rates more. They think that inflation could maybe go up again, which is not the best sign. So we want, well, I don't want to say we want to see, a lot of people get unemployed, but at the end of the day, when we're looking at the economy, that would help decrease the pressure on inflation. That's just how it works, guys. That's the reality of the matter. So unemployment is still very low, but one thing that is, I guess, good from the Fed's perspective here for inflation is the fact that non-farm employment change came in at 209,000 compared to the 306,000 last month and the 226,000 estimated. So it came in way under what it was last month, and it came in way under the estimate of 224,000, guys. And if we look at what this measures, the non-farm employment change, this is the change in the number of employed people during the previous month, excluding the farming industry. So the jobs market is cooling off by the looks of it, right? You can see the story right here. The headline: U.S. jobs shows signs of a slowdown, but it won't deter the Fed, which it probably won't. I mean, it won't. But again, like I said, the Fed wants jobs to slow down. It wants unemployment to go up because that's going to really help cool off the economy, which will then cool off inflation. Even though that means people are going to lose their jobs, they're going to be suffering a little bit more. That will help out inflation. That's it's the harsh reality at this point in time. And this is the vital economic data, of course, released shortly after the month ends. The combination of importance and earliness makes for hefty market impacts. So that's probably, in my opinion, why the markets are up. The fact that the non-farm employment change came in way less than expected, and maybe that means the Fed might go easier. But again, you guys saw that. You saw that article title. It said here, the U.S. jobs show signs of slowdown, but it won't deter the Fed. It probably won't. They're still going to do 2 rate hikes like they're projected to do, like we all saw was that the last meeting or the meeting before? Either way, the FOMC on average, they think that the Fed funds rate could go to 5.6%, which is a little bit higher than where it is right now. That's pricing in 2 more rate hikes. So yeah, guys, at this point, that is probably what's moving the markets today. I don't know. What do you guys think? Let me know in the comments. But that is some key economic info that has come out over the past day or two. That's a quick little rundown, quick little summary. Let me know your thoughts down below in the comments. As always, guys, and hit that like button and look at the markets right now, 12:25 p.m. and everything's in the green. We have the Russell up, NASDAQ, S&P, but the Dow's not green yet, but by the looks of it, it might go green later today. So let me know your thoughts down below in the comments. Feel free to hit that like button, subscribe, and don't forget to get your free money from Moomoo, guys, the sponsor of today's video. Simply go down below or go to stocks.com/Moomoo, open up your account and fund it with at least $100. You get 5 stocks right off the bat, each up to $2,000. And listen to this, guys, fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks. And the best part is, if you fund your account with at least $5,000 on top of those 15 stocks, you also get a free share of either Tesla stock or Google, guaranteed, which is limited time, guys, for that part of the promo. So use that link down below. And of course, that is an affiliate link. It helps out the channel. And with that being said, cheers. I'll catch you guys in the next video.